The SpaceX IPO is being called the most historic market event of our generation, and that might actually be true. $1.75 trillion at the opening bell would make it the largest IPO in stock market history. But here's the question that everyone's avoiding in all of the excitement. Is $1.75 trillion actually a fair price to pay? Today, I'm going to give you the most honest answer I can. Not based on hype, not based on fear, but based on the most credible valuation work that exists on this company right now. By the end of this video, you're going to have a very clear picture of what you're actually paying for if you buy this stock at the IPO price and whether that is a smart move. So let's start with a number that floored me when I first saw it. Morningstar, one of the most respected independent investment research firms in the world, initiated coverage of SpaceX ahead of their IPO. Their fair value estimate was $780 billion, not $1.75 trillion, not even close, less than half of their IPO price. Their analyst, Nicholas Owens, built a full discounted cash flow model on the business, and here's how he breaks it down. SpaceX's core operation, the launch business, and the Starlink satellite internet network are worth approximately $611 billion in enterprise value. On top of that, he assigns roughly $170 billion in probability-weighted value to the company's AI and advanced technology initiatives. Add those together and you get $780 billion. That is a number a rigorous professional valuation produces. So let's compare that to $1.75 trillion, the price you'd be paying at the IPO. That's a gap of $1 trillion. By the most credible independent analysis available, you would be overpaying by approximately $1 trillion on day one. I want to spend a moment on that 170 billion AI figure because it's an important context here. That number isn't guaranteed. It's probability weighted. Morningstar looked at several possible scenarios for how SpaceX's AI operations might develop, assigned odds to each and every one of them, and arrived at a weighted average. And here's what the SpaceX prospectus makes clear. Right now, that AI segment is burning through billions of dollars. It is not profitable. It is not even close to profitable. Morningstar is giving SpaceX credit for a business that is currently losing money on the hope it eventually becomes something significant. And even with that generous credit, they still land at a $780 billion valuation, which is less than half the IPO price. Now I can already hear the pushback. Morningstar doesn't understand Elon Musk. And honestly, that argument has some merit, but maybe not in the way that you think. Elon Musk is without a question the greatest storyteller in the history of entrepreneurship. He has a singular ability to take a possible future outcome, sometimes decades away, and present it to investors as not just likely, but inevitable. Look at the track record here. With Tesla, he spent years telling investors that full self-driving was about 1 year away. He said that in 2016. It's now 2026. 10 years later, fully autonomous vehicles are still not operating on public roads at scale. Every year, it's been 1 year away. On EV volume, at various points, Tesla and Musk were projected annual sales of 10 to 20 million electrical vehicles per year. The actual peak came in well under 2 million. That's not a rounding error. That's being off by a factor of 5 or even up to 10. With SpaceX, the ambitious promises include data centers in space, colonizing Mars, and point-to-point Earth travel via Starship. They're all fascinating, all possibly real someday, but someday could mean 5 years or 20 years or 50 years away, and the difference matters enormously to you and your investment returns. The pattern is consistent. Musk sets a vision so grand and so compelling that investors start pricing in before a single dollar of revenue has been generated from it. And when the actual results come in at a fraction of that promise, the stock starts to reprice. Here's the argument I don't hear enough people making, even if SpaceX eventually delivers on everything that it promises. When it delivers matters as much as whether it delivers. Your capital has a cost. Every dollar you put into SpaceX at 1.75 trillion is a dollar that can be compounding somewhere else. Consider this. If the Mars colonization timeline slips from 10 years to 20 years, which, given his track record, is a real possibility, that's a decade of your money sitting in a speculative position while the rest of your portfolio could have been compounding. Even something as boring as a money market fund is generating about 5% annually right now. Over 10 years, that's roughly 63% cumulative returns on a near risk-free basis. You're giving that up to wait for a promise to materialize. The question is never, will this work? The question is, will this work fast enough to beat everything else I could have done with that same money? Let me tell you something about who buys IPO at peak valuations because it matters. It is not Warren Buffett. It is not the institutional funds at Vanguard or BlackRock. Sophisticated professional investors do not pay 200 plus times revenue for a company with a mixed profit picture, regardless of how exciting the story is. The buyers at these prices are primarily retail investors, people driven by excitement, by FOMO, by the cultural energy around SpaceX and Elon Musk. There's nothing wrong with being excited, but excitement is not a valuation methodology. Morningstar's analyst puts it plainly: SpaceX will likely offer investors a better entry after the IPO. That frenzied buying at the open tends to fade, the hype cycle starts to cool down, and when it does, the valuations start to matter. So I'll be direct. At 1.75 trillion, I have no interest in SpaceX stock. Not because SpaceX is a bad company, it's an extraordinary company. Not because Starlink can't grow into a massive business, it absolutely can. But because of the price I'd be paying on day one assumes all the success to be guaranteed. And I've watched too many investors lose money on guaranteed stories to pay that kind of premium. For me to get genuinely interested, I'd need to see a valuation significantly below 1 trillion. Somewhere the fundamentals of the business today, not the promises of tomorrow, can justify that price. That level could come in the weeks or even months after the IPO if the initial euphoria starts to fade. Until then, I'm watching from the sideline. Patience, discipline, waiting for that price to retrace or make sense in some manner. The SpaceX IPO is historic. The company is real. The technology is impressive. But a great company and a great investment are two completely different things. And the price you pay determines which one you get. At 1.75 trillion, you're not buying SpaceX. You're buying a story. And stories, no matter how well told, eventually have to be backed up by numbers. So my advice, be patient, be disciplined. Don't let anyone, no matter how good a salesman that they are, talk you to overpaying for the future. If this breakdown was useful, subscribe down below. We do this kind of work every week, so you don't have to. I'll see you guys in the next one.